Hello again traders, Andrew Curry here, and let's have a look at how we can use the higher time frame to help with our trading time frame. Okay, so what we have when we have, let's say, a bearish movement. Okay, so it's rare for the markets to simply go bang, bang. That's what we're doing, continuous bearish movement. Instead, what tends to happen is we'll move bearish for a bit, and then we'll see a retracement bullish, and then we'll see a continuation down in the bearish direction, violating here our previous lowest point and putting in a new lowest point, at which point we'll probably see a more bullish movement to produce another outside return and so on, and that continues on. Okay, so that being the case, we would expect to see a continuation in the bearish direction until we see evidence to the contrary. And the evidence to the contrary that would indicate we're no longer seeing a bearish trend would be if we violated our most recent outside return, right? If we put in a close above the highest high of the previous outside return. So if we do that, we've continued on bearish. If instead of doing that, we bullish, break and close past the most recent outside return, well then we believe the trend has ended and we are now moving in the bullish direction. Okay, so what I'm getting at here is, let's have a look at this practical example. We've been traveling in the bearish direction down, and most recently we've had movement there, retracement, and new lowest point here. Okay, and when we get to this point, we want to trade the continuation in the bearish direction, right? So if we look back here, the trade we would want to take would be that there, right, for a retest of our recent low, like that. That would be our trade if we're a trend continuation trader. Okay, so if we're a trend continuation trader here, we would want to look for trading opportunities to retest our new lowest point, which is here. If instead of giving us that entry, we close above the highest high of our most recent outside return, we would consider that to be the trend has now broken. But in practice, what we get a lot of is this, right, where we break just a little bit above. Okay, now by our rules, if you can see here on this line, okay, clearly closed above, but only just, okay, which can be very frustrating. Now, as far as I'm concerned in my rules here now, this indicates we have broken above. Okay, so I would not any longer be looking to take the risk of playing for the retest again. But it can be very frustrating that our rules say close above, we are now looking for a trend in the opposite direction. And yet in practice, our signal is really just one candle pushing a little bit above. Okay, so there can be lots of times when it sends you in the wrong direction looking for the wrong type of trade, as in it's a bit like a breakout, a fake break, where it pushes just a little bit past the line and doesn't actually give you that breakout, right? So in a way, this is a fake breakout, a fake reversal. So what can we do when we get these? Because our rules say we're now looking for a trend in the opposite direction. It has violated our most recent high point of our most recent outside return. Let's look at this on the daily. Okay, so let's just take my clutter off. Okay, now what does it look like on the immediate higher time frame from the 4-hour, which is the daily? We can see it's a much neater situation. There is our high line, there is our high point, and we did not close above it. We spiked above it, but we did not close above it. On the higher time frame, the daily, we have every reason to believe we are still looking for a bearish trend. What we can do is we can build in an extra rule which says this is the situation on the 4-hour, but we double check on the higher time frame. And on the higher time frame, if we don't see that and instead just see a spike rather than a close. So we've used the cleaner situation on the higher time frame to help guide us in the trading time frame.